And again, we're at the beginning of the beginning, okay? For all of us that lived through 2000, this was 4 years of sheer hell and a grind. Now we have $30 trillion that we have to work through the economy, a recession we have to overcome, a war we need to end, and people all of a sudden assume that 2 or 3 rate hikes and 5 or 6 months of headlines are enough. And if the Fed is going to take $3 to $5 trillion of value out, then we have to re-rate the equity markets by $3 to $5 trillion at a minimum. And then you have to re-rate and re-baseline for earnings. And so that's probably another 20 or 30. What we really did was we gave folks just a ton of money. And what did they do? They acted rationally. They spent it. Now we have to take it all back. And that's going to be as easy or as simple as people think.
Chamath Palihapitiya is a Sri Lankan-born Canadian and American venture capitalist and the founder and CEO of Social Capital. Palihapitiya was an early senior executive at Facebook, working at the company from 2007 to 2011. Following his departure from Facebook, Palihapitiya started his fund, the Social Capital Partnership. In the past few years, he's been making waves in the business and investing world, with his name being all over the news. In this video, Chamath uncovers what we are in for as the US economy plummets into the worst recession of the last 2 decades. So make sure to watch to the end to find out what we are in for.
You have to do, before you talk about what is happening now, I think it's probably useful to go back, and you have to really start at the end of the great financial crisis. And the reason is there was a bunch of people coming out of the GFC who confused what the US government and some European governments were doing. At the time, there was the risk of a huge financial contagion. And so the US stepped in and the Federal Reserve started to use their balance sheet to buy toxic assets, right? And the ECB did that, and I think Japan did that as well. Anyways, a bunch of banks did it. A bunch of governments did it. And then there was this body of pseudoscientific economists who coined this thing called modern monetary theory, which basically said, hey, you can keep printing money and introducing it into the economy to smooth things out and to actually drive long-term growth. And it turns out that a bunch of government officials fell for it. And if you fast forward to 2022, so 14 years later, governments around the world had printed something to the tune of about 35 odd trillion dollars of money into the economy that should have never been there.
Please remember to like and subscribe and hit the notification bell to be notified when we bring out a new video.
One of the things that we have to realize is that all of that money somehow needs to get destroyed in some way, shape, or form if the true economic equilibrium is meant to be found. What is true supply? What is true demand in the absence of government sloshing money around, trying to prop up things that should not be propped up, or buying votes, or all the grifts that these folks have engaged in the last, decade and a half have to get undone. So that's the backdrop. So if you think about taking $30 trillion out of the global economy, you're talking about almost, I think it's 85 trillion is the world GDP. So it's almost half of an entire year's worth of global GDP. It's going to take 3 years probably of the slow, meticulous, running off of money, not reintroducing new money. So it seems like we're at the beginning of something that's going to be long and drawn out. Now that's separate from whether we're in a recession or not. That's just the bear market that we're in, right? And so you have to look at asset prices today as a microcosm of a much larger trend that has to be about fake money pushing asset prices up, and now taking all that fake money out and finding out what the real price of something is. Fed raises 75, we're done with this, they're going to raise 75 more. I just think that's not how it's probably going to be. It's going to take, 24, 36 months. That may mean the bottom doesn't happen for another 18 months. So I think we're in for a lot of choppy market action. there are a handful of components that have gotten completely run away. Number one, the biggest one is rent. And so rent works on a 3-month lag. We're going to reintroduce what the true owner's equivalent rent is into CPI. So we can already forecast that CPI going up. Oil is at $105 a barrel. Russia is basically trying to break the back of Europe by now messing with their nat gas supplies. The German energy minister yesterday said that if that happens, it could be a contagion equivalent to Lehman Brothers with respect to energy. When you play all of these things out, what you have is unfortunately rampant runaway costs that really have no mechanism to get back in check in the absence of some real governmental changes. Our policy on this Ukraine-Russia war, how we intend to sort of work or cooperate or fight with China, all of these things have to get solved. So in the absence of that, prices are going to continue to go up. And so what does the Fed do? How does it throw away what little credibility it has left when there's 8 and 9% inflation prints and saying, we think we're done for right now? You can't do that. So they will overcorrect because there's just going to be so much pressure for them to act. What we really did was we gave folks just a ton of money. And what did they do? They acted rationally. They spent it. Yep. And now we have to take it all back. And that's I don't think that's going to be as easy or as simple as people think. So, it stands to reason that if the Fed is going to take $3 to $5 trillion of value out, then we have to re-rate the equity markets by $3 to $5 trillion at a minimum. And then you have to re-rate and re-baseline for earnings. It's the worst kept secret in crypto how much insider trading is going on amongst the organizations that run the exchanges and their side pockets that they use to manage liquidity. I mean, it's the biggest thing that's been happening in crypto. Most of these organizations that run an exchange, right, compete for order flow, and they're able to just look at that order flow and then they front run the trade and they're on the other side of that. So they're always making money. And so they were making tens of billions of dollars. All these exchanges were. We talk and we bloviate about our desire for energy independence, and we exclude Tesla from any sort of major meaningful legislation. We trumpet these companies that are just completely woefully behind in building energy independence. We think about like a gas tax holiday, but as like kind of like a something that still needs an act of Congress to pass, even though Congress has said they have absolutely no intention of passing it. Meanwhile, we keep losing our footing to China. Just today, CATL, which is one of the largest battery manufacturers, announced a pretty meaningful improvement in their 3.0 battery design. These guys are now building batteries that can go 1,000 kilometers in both of the major compositions that really matter, NMC and LFP. And I just look at these things and I'm like, wow, we cannot actually get capacity funded to build domestic battery capability because we're too busy kind of basically virtue signaling on things that don't matter. And in return, nothing happens. China continues to lap us. It's a really bad state of affairs. We are in a very odd period in terms of government effectiveness. For hundreds and hundreds of years, and in some cases thousands of years, where internally the population of that country views themselves, in a great way. They don't feel like their country is a meaningless nothing country. Any attempt to economically humiliate such a country tends to have failed in the past and will continue to fail. And there tends to be other countries who view it as one of these things where, well, if them, then why not us? And then they sort of, in a backhanded way, support everybody. So we end up in this odd situation where we are picking fights we cannot win. And the consequences for us are economically really damaging. Absolutely. Consequences for everybody else to stay on the sidelines is like economic prosperity. That doesn't make any sense.
Please remember to like and subscribe and hit the notification bell to be notified when we bring out a new video.